Good morning, everyone. I'm Tom Bracken. I'm the president and CEO of the New Jersey Chamber of Commerce, and I would like to welcome you to the first in a series of webinars focusing on the issues of small business as our economy hopefully enters into some kind of reopening phase. The series of webinars comes at a very urgent and sobering time for small business. A February survey of the Federal Reserve showed that nearly 1/3 of small businesses said they could not survive until the economy returns to normal if they did not get financial aid from the government, in addition to what they've already gotten. When asked what they thought about the recovery returning to normal, 14% of the respondents expected that the normalcy would return sometime in the first half of 2021. 41% said they thought it would happen in the second half of 2021. And the rest of the survey participants said it would be 2022 or later. With that in mind, our webinar today will look at the economic outlook specifically for small business. The second webinar in the series, which we scheduled for May, will look at the general national economic situation. Then later this year, the remaining 3 webinars will discuss ways small business can grow in the post-COVID-19 economy. I would like to thank our partner and sponsor for this series of webinars, New Jersey Manufacturers Insurance Group. In a moment, I will turn the webinar over to Steve Goldman of New Jersey Manufacturers, who will introduce our guest speaker. Following our speaker's presentation, there will be a Q&A session. Some questions have already been submitted, and we invite you to submit any questions you would like and do that via the chat box. We will get to as many questions as we can after Tom Sullivan finishes his remarks. It is now my pleasure to introduce Steve Goldman, Assistant Vice President, Commercial Lines for New Jersey Manufacturers Insurance Group. Steve?
Thanks, Tom. First, I'd like to thank the New Jersey Chamber of Commerce for hosting today's webinar. The Chamber has been a vocal proponent to New Jersey businesses for over 100 years, and we appreciate their guidance and support in finding cost-effective solutions. NJM has been providing insurance solutions for more than a century. We were founded by business owners, for business owners, to help protect employers and employees at the workplace. For more than 70 years in New Jersey, we've been the largest writer of workers' comp insurance. We're also a leader in commercial auto insurance, and while we're very proud of the history as a trusted partner, it's our future that has us excited in 2021. Earlier this year, we introduced NJM ProEdge, a business owner's policy that is now available to businesses across the state. A ProEdge policy combines protection for property and liability risks for small business. This product provides cost-effective insurance to suit your needs. ProEdge policyholders are also eligible to apply for our new commercial excess and umbrella product. It provides that extra layer of coverage your business may need with higher limits and added protection against claims. These new business coverages complement our workers' comp, commercial auto, and commercial general liability policies, offering a total account solution. In addition, policyholders will continue to receive the highest levels of service and integrity from NJM. For our business insurance customers, that means access to our nationally recognized claims service and our workplace safety resources. We strive to help businesses save money by matching the right insurance coverage to your business, focusing on workplace safety to mitigate losses, and containing medical cost claims. Finally, NJM is now a true regional carrier. Workers' comp insurance is available in Pennsylvania, Connecticut, Delaware, New York, and Maryland. Expanding our geographic footprint has enabled NJM to support our policyholders as they grow and expand regionally. If you have interest in joining the NJM family, visit our agent directory, contact us, or get a free quote online at njm.com. Our online portal has made it easier for customers to obtain information and apply for insurance. While we've clearly embraced change at NJM, operating for the exclusive benefit of our policyholders is a core value that we will never change. This past year, small businesses have endured a lot of change of necessity. Today's webinar will discuss the outlook for New Jersey small businesses in 2021 and what we can anticipate. Slowly but surely, we are seeing things moving in the right direction. The support of the New Jersey Chamber of Commerce has been critical to an economic rebound in our state as they continue to lobby for more government support in the form of grants, loans, and tax relief. As Chamber President Tom Bracken recently stated, this should be a time when we pull out all the stops and put together a game plan to really supercharge the economy. On behalf of NJM, I wish you all great success in 2021. To kick off today's webinar, I'd like to introduce Tom Sullivan. Tom is Vice President of Small Business Policy at the U.S. Chamber of Commerce, where he has worked since 2017. Tom works with chambers of commerce across the nation to cultivate the views of small business and translate them into federal policies that bolster free enterprise and free entrepreneurships and reward entrepreneurships. Tom has also practiced law at the prestigious firm of Nelson, Mullins, Riley, and Scarborough. He joined the George W. Bush administration, serving as highest-ranking government official, charged with advocating for small businesses before government agencies and Congress. And Tom has also served as the U.S. Small Business Administration as well. The National Federation of Independent Small Business Legal Center Advisory Board, the Board of Directors of the Global Entrepreneurship Network, and the Bipartisan Policy Center. We are thrilled he was able to carve out time to be with us today. Thank you for joining us. Tom?
Well, thank you, Steve, and thank you, Tom, for having me. I've got a slide deck. I know that's so exciting to greet us all first thing on a Tuesday morning, but it actually helps me keep on track. I tend to get pretty worked up about small business issues, and my passion sometimes leads for me to go down a rabbit hole. And so having a deck actually will help me keep on track, provide you with as much information as possible. So this is nice to have this nice glossy picture of me wearing a tie, which hasn't happened really since 13 months ago. But I do still own that one tie, just in case we all get back into the office environment. I will say at the onset, although I am going to focus on resources that are available for small businesses, there is a tremendous amount of optimism out there on main streets across the country. And I suspect that we'll hear a little bit about this during the questions and answers and the comments immediately following my presentation. Our latest survey show that there is certainly a light at the end of the tunnel, that light being vaccinations. And if I can pretend to be an economist for a second, where I say on the one hand and on the other hand, with the good news of there being a light at the end of the tunnel, what we are finding from small businesses is the acknowledgement that the tunnel is very long. We really have not seen outlook and sentiment dip below the 6-month to full recovery, even as vaccinations start rolling out. We expect for that outlook to shorten for 2 reasons. 1, more people will get vaccinated, and 2, quite frankly, because of time. If we do the same survey in 2 months, that will mean that same time series is now 4 months instead of 6 months. But we're still at about 50% of small business owners believing it's going to take more than 6 months to recover. So certainly a lot of optimism, but again, that optimism is then softened a little bit through some pragmatism of how long it's going to take to recover. What we also are finding is that this is very much specific to the industry sector. In Washington, D.C., where I work, we love to try to generalize. I think one thing that we've seen within the pandemic is that as soon as you start generalizing in the small business community, you get into trouble because the sectors are so different. Construction, for instance, really doing very well throughout the pandemic. Restaurants and hospitality, as we all know, not doing well at all. And so when you look at the differences of how they're doing and how they're poised to recover, very different sector by sector, also very different related to the demographics, the business ownership, minority owned, women owned, et cetera. I'll get into a little bit of that during the presentation, but also I am hopeful that we have some discussion of that in the question and answer. So let's just dive right into it. And I've got my own kind of set of cheat sheets to follow along. So just a quick look backwards about kind of what the federal government has tried to do, tried to make available to help small businesses over the last 12 to 13 months. So 13 months ago, excuse me, CARES Act created PPP program. Now, fast forward to right after Christmas, we actually had a major stimulus legislation signed into law that restarted the PPP loan program. It also created two industry-specific funds. One, the Shuttered Live Venue Operator Program, which will issue grants starting this week, April 8th. And then the Restaurant Revitalization Fund, which will be providing grants. They expect that program to be open and running at SBA by the end of the month, but no specific date has been released yet. So let's talk a little bit about the improvements to economic aid that happened right after Christmas. And I want to say, to kind of set the stage a little bit, what we've seen, and at the U.S. Chamber of Commerce, working with our partners, Tom, and then we've cloned Tom about 2,000 times all across the country, because we are working with about 2,000 local and state chambers of commerce. So Tom and about 2,000 of his clones have worked tirelessly together to try to convince Congress to target relief to the communities that need the most help. And so what we'll see is, at first, a giant push of getting cash out to small business, then a narrowing in on those sectors that obviously need help more. So there's a targeting, and then also there is very soon to be a sunsetting of a lot of these provisions. At the U.S. Chamber of Commerce, we've said that relief has to be targeted and temporary, and we continue to believe that that's probably the best way to poise the economy for a rapid uptick and take advantage of pent-up consumer demand that we also see. So we look at the end of the year last year with the Economic Aid Act, and there are a couple of changes. One significant change was allowing nonprofit chambers of commerce to access PPP. And at this point, I will pause and at least acknowledge some embarrassment about how long it took to get one of the most common sense additions to the PPP program. Tom and his colleagues all across the country were hosting webinars like this for small businesses to try to direct those small businesses on what aid is available. Many times even hosting their elected leaders in Congress as part of these calls, yet could not actually tap into the very program that was designed to help the small business community. And I'm embarrassed, quite frankly, that it took really over 6 months to convince Congress to add local chambers of commerce to the groups that can take advantage of the PPP program. But with that said, we're successful in getting that passed into law at the end of December. Another thing that is a little bit embarrassing, but not necessarily embarrassing for me, but embarrassing by sometimes the lack of common sense. Last year, during the rollout of economic aid, it was obvious that we wanted to free up cash in small businesses. Really as simple as that. Yet the IRS wanted to treat that relief as taxable, which made absolutely no sense whatsoever. To have one part of the federal government say, here's aid to free up cash, and another part of the government saying, well, you owe it all to the federal government anyway. So from an embarrassment perspective of the lack of common sense, we finally were able to convince Congress and, quite frankly, Secretary Mnuchin, the Secretary of Treasury, that it just didn't make sense. Congress had to step in and say the forgiveness portion of PPP and other economic aid are not taxable from a federal perspective. Also part of the December package was expanding the employee retention tax credit benefits. If you have no idea what the employee retention tax credits are, and you do have employees, please, please, please talk with your CPA. If you're large enough to have a bookkeeper in-house, please talk with your bookkeeper or talk with your payroll provider about taking advantage of the employee retention tax credits. A little bit too complicated to get into details through this webinar, but I would hate for small businesses to leave federal aid cash on the table when you are able to take advantage of this relief. Simplified PPP forgiveness for businesses who borrowed less than $150,000. And then just went into effect last week, allowing employers to have a tax credit for the time off that their employees take to get vaccinated. So now, even though my mom wants to rename my middle name PPP so that it would be Thomas PPP Sullivan, I actually am lucky to spend less time on explaining the ins and outs on PPP than I would have 4 or 5 months ago. So if you have not heard about PPP at all, it's probably too late. I hate to be that blunt, but because of that, I'll kind of skip through this pretty quickly. The Economic Aid Act that passed at the end of December allows for a second PPP. It's called the second draw PPP. If you're able to show that your revenues are 25% less than a similar quarter, the comparable quarter of 2019, you're eligible for a second draw. Now, this program was set to expire last week, but there were over 1,900 small businesses stuck in the queue with SBA to get approved. And luckily, we were able to convince Congress to give the program 2 more months. Now, that isn't to say that there's 2 more months, that there's tons of more capital. That's just not that's not the case at all. We just wanted enough time so that if you are already in the process of working with a bank or a lender to get a PPP loan, that you have enough time to get through the checks that happen before you get approved. Now, you may be wondering, well, what the heck am I talking about on the checks and stuff like that? So when PPP was first released, there was a lot of criticism of fraud. People claiming that they own a small business, but they didn't, putting their money to new Ferraris and Lamborghinis instead of actually keeping employees employed. And so what SBA did this past fall is that they instituted a series of checks, authentication requirements in order to obtain a PPP loan. So when the bank submits the PPP loan on your behalf, many times you get a bounce back error code. And a challenge that has happened, very similar to when you do an iOS update on your iPhone or a software update on your Android phone, there are a bunch of glitches that have happened over the past two months. Some of those glitches have to be worked out. They take time, and it has taken longer for small businesses to get the SBA approval for a loan than it did before. And so hence the need for additional time for SBA to work with borrowers, work with lenders to work this all out. So the new deadline to have SBA approve a either first draw, which is a first time PPP loan, or a second draw PPP loan is May 31st. So I mentioned before that if you've never heard of the Employee Retention Tax Credit, please, and you have employees, please, please, please talk with your CPA. If you work with a payroll provider, talk with your payroll provider. If you are large enough to have a bookkeeper, please talk with your bookkeeper about taking advantage of the Employee Retention Tax Credit. This is a simple slide that shows that there are cash available. And I would hate for small business to leave this type of aid on the table and not take advantage of it just simply because time doesn't allow to talk with a CPA, payroll provider, or a bookkeeper. I also am skipping through that fairly quickly because I am not a CPA or a bookkeeper or a payroll provider, and it gets complicated really quickly. And so I don't mean to be sloughing off this work to others, other than just being very respectful of that profession that can give good advice on how you take advantage of this tax credit. So let's get into some of the new stuff that's kind of coming down the pipe, because this is more of that targeted approach that has happened since a year ago. And those targeted approach are for live venues and for restaurants and hospitality. So let's get into the live venues first. Let me fast forward into some of my notes here too. These are all brand new programs, so they seem to be updated frequently. Now, the shuttered venue operator grants. These grants open up this week. How much you can get from a grant is about 45% of your 2019 revenue, up to $10 million. So that's a significant amount of money. Now, why should you care about this if it isn't even open for application yet? Here's why. First of all, it's gonna run out of money quickly. The reason for that is because museums and theaters were added to the list. And when you look at all the museums, you look at all the theaters, that's a significant amount of applicants that are expected to flood the system. So in this slide, there are two immediate action items. If you are a business that depends on ticket sales for an event, that is really the dividing line. I mean, there's a ton of, do I qualify if I'm this type of business? Do I qualify if I'm that type of business? That is all at that SBA guidance, sba.gov/coronavirus relief. But the clear delineation is making revenue based on ticket sales for an event. That seems to be the real kind of dividing line of, are you in or are you out? If you do maintain did maintain a significant amount of revenue based on ticket sales for events, you need to get a DUNS number. That's shorthand for Dun and Bradstreet. So you can do a simple Google search. How do I get a free DUNS number? Comes up with how you do that. After you get a DUNS number, you must register with sam.gov. Now, that's, I guess, the government's kind of joke about making an acronym the same as Uncle Sam, but whatever. It means it's sam.gov. It is the government grants portal. Requires a DUNS number, bunch of other information, and it takes a few days. It takes a few days to submit the information, get the information back that you are registered. It is free, but as usual, that's a little bit of an overstatement because it's your time to fill out this. So it's not really free. It takes time. Time is money, especially from small business owners. But you are able to apply unless you have the DUNS number. The DUNS number is required to register with sam.gov. Both of these things are not charged. If you get a solicitation or in anywhere on the website, there is a monetary charge. It is a scam. Get out of that website. Don't click on links for scam emails that come in, because you are not able to be charged for getting a free DUNS number or registering with sam.gov. You must do these things in order to apply for the shuttered venue grants. There will be more information coming out from SBA. They've done a decent job of trickling information out to let small business owners know about this program and how to get the program. Last but not least, we're almost at the end of the deck here. This isn't last. Sorry, I was premature. This is SBA's disaster loan program. It's still up and running. Brand new SBA administrator, Isabel Guzman, has committed to removing the cap that has been on these loans at $150,000, which is unfortunate. Traditionally, it's supposed to be on 6 months of working capital that have been used by a business, up to $10 million. Excuse me, up to $2 million. That's traditionally been the threshold. Because SBA was worried about running out of money last year, they capped it at $150,000. And I give the new SBA administrator, Isabel Guzman, for immediately tasking her team to make an effort to remove that cap. That is ongoing. It hasn't been removed yet, but I expect that that will very shortly. So SBA's disaster loan program is up and running and accepting applications. These are not for forgivable loans. These are as much a traditional loan product as you can get, although the money does come from the federal government. It is not through a third-party lender or bank the way that PPP is. All right, so here's the last information before we kind of turn it over to a broader discussion. Brand new part of the American Rescue Plan is the Restaurant Revitalization Fund grants. The portal has not been open on this, so there's a little bit lack of detail on what these are and how to apply, other than looking at the statutory text. There was one change that just happened last week. SBA is not going to require for you to get a DUNS number and register with sam.gov the way that they are requiring for the live venue operator grants or the restaurant program. So that was just announced last week. Not sure what the requirements are going to be. Now, just to share with you some inside tricks, the National Restaurant Association, that is a significant partner along with every state restaurant association across the country, has really been the driver for this program for pretty obvious reasons. And their website that was just stood up last week is restaurantsact.com/RRF. They provide the latest data and information about the Restaurant Revitalization Fund grants. there. All right, this is the last slide. Then we go to questions and answers, and I'll be rejoined by Steve and Tom in a moment. So if you are thinking, if there is a burning question, just try to compose your thoughts while I go over this last slide. This last slide is simply a visual to make sure that you know that we are partners with Tom and Tom's clones, all 2,000 of them, all around the country, to help state, local, regional chambers of commerce get information to the small business community. This is a significant shift for the U.S. Chamber of Commerce. We are primarily a lobbying and advocacy organization, but at the beginning of COVID, we heard loud and clear from small businesses that they need what I would call closed captioning for government speak. They needed a translation of all of these resources and aid to be boiled down into usable information from a small business owner's perspective. I think we tried to meet that challenge, both with guides that are online and that are listed here. We have a small business digital platform called Co. It's growwithco.com. Tries to also provide translation of different federal aid and resources. And we now are certainly trying to meet a similar challenge on questions about getting vaccinated, because we believe that really the most clear direct line for a full economic recovery is through vaccinations. And we are committed to continuing this type of information and serving as an information resource to Tom and to others and to all of you as long as it takes. So with that, I'll stop sharing my slide deck. Tom and his team do have that slide deck. It's certainly available to all of you. Happy to share it. There's really no proprietary or confidential information in there. So with that, I'll turn it back over to Steve and Tom.
Thanks, Tom. If I could kick off the discussion with one question. How would you characterize the U.S. Chamber's relationship with the Biden administration, and in turn, the Biden's administration relationship with small business?
So we could spend a whole nother hour on that as it's developing, but I'll try to be shorter than that. So the first one is a good relationship. So yeah, that probably doesn't surprise anybody for that to be my initial comment. I think the appointment of Isabel Guzman as the head of SBA, certainly a very strong positive message. She has a reputation as a roll up your sleeve small business advocate and really a technical expert and very passionate. And she's already started to make some what I would call very common sense changes at SBA. I think when you dig a little bit more deeply into the pros and cons of this administration, I would say the U.S. Chamber is politely critical. So for instance, in the American Rescue Plan, we really felt as though targeted and temporary was the way to go. And we also were really strongly pushed by the administration to have a bipartisan approach to relief and recovery. And their use of the reconciliation, I think we were politely and constructively critical of them not being able to have a bipartisan approach with the first massive piece of legislation out of the box. So I think politely critical is probably a little bit more detailed of an answer other than saying good.
I'll pick up on that too, just to help answer that question, Steve. You know, I've been part of a 50-state U.S. Chamber task force since the beginning of the pandemic, and I would tell you that the U.S. Chamber has fought ferociously for small business with regard to these loan packages. Things like including 501c6s in the legislation was something that the U.S. Chamber had a tremendous input in making sure happened. The extension of the PPP program through May 31st was something that the U.S. Chamber promoted and had a very heavy hand in getting implemented. there's a very strong relationship between the U.S. Chamber and the administration and also Congress to get these things passed. And they've done a tremendous job of supporting the business community throughout this whole pandemic. And there's more to come, and they're working right now on other things to help the business community. So, Steve, hope that just adds a little bit of flavor to the question you asked. Tom,
Tom, I love the characterization of ferocious. That actually that made
yeah, they are.
that made my day, and
They are ferocious.
I couldn't agree with you more. I didn't have any gray hair before the pandemic, and so ferociousness has its price.
It does, but a good price. So, Tom, a question that I have is that throughout this whole pandemic, the thing that we have been pushing for to make sure was absolutely in place to allow companies to survive and get to recovery is to make sure that they had sufficient working capital. You can talk about anything you want to help businesses, but if they don't have the money to survive, all bets are off. And the PPP, the idle loans, employee tax credits, employee retention tax credits, all those helped the businesses with their cash flow. But there is an end coming to that on May 31st. So my question is, do you anticipate, if the economy does not recover at the pace that people anticipated, that there might be more federal assistance for small businesses in the way of grants or forgivable loans to get companies from that point to a degree of normalcy?
So thank you for that question. I do not believe that there's going to be a continuation of PPP. I do think, though, that a lot of the money that came out of the American Recovery Plan that is designed to go into New Jersey is designed to go into the localities within New Jersey. You're going to start seeing that money actually end up in different communities. And we, at the U.S. Chamber of Commerce, working with you, Tom, we've got to make sure that we direct our businesses to those funds and to enable them to tap into them. We saw that actually with the CARES Act. And although very difficult to track, different localities have different approaches. Some had workforce development. Some had entrepreneurship startup grants and investment opportunities. So it's different in almost every state. But I think that's where that next round of money that will be available will come from. So it's not new money from Congress's perspective, but it certainly is new money as far as communities, cities, and counties go, because it's taking a while to get the money from Washington, D.C. to New Jersey to the different townships that you work with every day. So I think that's primarily going to be the focus. And I think you are going to see a continued disconnect between sectors and demographics. So for instance, minority-owned businesses have been the hardest hit and have had the hardest time getting working capital. So there is a question of, okay, how does the federal government narrow in on that demographic? And there is increased focus with working with the community development financial institutions, CDFIs, in order to get that money to minority-owned businesses who have had a harder time recovering from the pandemic than others. So I don't think we'll see more of the PPP, but we will see kind of a redirection both from state and local funds and an emphasis on specific demographics, whether that be women-owned, veteran-owned, or minority-owned.
And Tom, just to amplify that, our challenge in New Jersey that we're fighting very diligently to get accommodated is having the use of the American Rescue Plan money that's going to the state and the municipalities, having a big chunk of that available to the business community through either grants or other types of affordable loans because that's, as you said, another source of working capital that needs to be tapped to put the final touches on these companies to allow them to get to recovery. So we're pushing very hard for that right now, because it's got to be part of this plan, or the recovery just won't happen as we'd like it to happen.
I couldn't agree with you more. Thank you for commenting on
that. Steve, you have another question, or do you would like me to ask one?
Sure, I have another one. As the national economy begins to reopen to a larger level, what do you think this single largest issue looming for business owners and operators might be?
Oh, that's an easy one. Finding and keeping employees. Really that's simple. So, even though it's a simple one sentence response, as Steve, as both you and Tom know, it's a really complicated set of solutions. So first of all, vaccinations, and not vaccinations just so that employees get to work, but vaccinations because parents like me can't both be looking after their kids who are doing their schooling online and also go into work and work all day. So the vaccination component has a lot of levels that all equate to getting the availability of employees and professionals back into the workforce. And so that is going to be a significant component to answering the call to scaling up. We were already seeing in the construction industry for several months, their biggest issue has been to find, hire, and keep qualified and willing employees. So we see that same phenomenon going across all sectors the closer we are to full recovery. So that's going to be I think the biggest challenge. And when you look to, well, what do you do federally besides making sure that vaccinations kind of get deployed efficiently? Well, I think it's very simple. I think the question to every federal lawmaker should be, how are you going to make it easier for a small business to hire one more person? That's it. If you can do that in a socially distanced elevator ride, say, and people like Josh Gottheimer will be able to answer that question immediately, which is fantastic. But just asking that question, how are you going to make it easier for a small business to hire one more person? And that answer, whether it relates to workforce, whether it relates to tax credits, whether it relates to immigration, those answers are what's going to provide, I think, the solution, or quite frankly, to get out of the way of small businesses. Those answers are going to provide the solutions to what I think is going to be the biggest challenge at the end of 2021 leading into 2022.
And Tom, just again, to amplify that for New Jersey, for the listeners and the people on the call today, we couldn't agree more that herd immunity is the thing that opens up the economy. Yep. And gets us to recovery the fastest. We have to get the vaccinations done so we get to that herd immunity situation. And then as regarding employees, the other piece of that is to use some of that federal money for workforce development. There are a lot of people out there who are out of work that are going to need to be retrained as we get to this new economy. Yeah. We have to provide the money to get them trained so they get back into the workforce. And in New Jersey, to your point about making it easy for hiring people, there is legislation right now going through our legislature that will provide tax credits to companies who hire unemployed workers. So that gives those companies an additional incentive to bring people back into the workforce, maybe retrain through federal dollars for workforce development. So all that stuff is out there. It's a matter of bringing all that stuff, which is good, together and making it work, bringing the pieces of the puzzle together. It's all available. It's just a matter of getting it all done in a very logical plan. And if it does, myself and others are very optimistic about what the future of our economy is. So
for those of you who are not watching throughout Tom's entire comment, I was ferociously nodding my head.
Just to shift gears a little bit, because we, part of the American Rescue Plan is great, and now we have an infrastructure plan coming down the pike. And one of the keys for our state is infrastructure dollars in the truest sense. Roads, bridges, surface money, because that's the backbone of our economy. And in that context, how do you see money for the Northeast Corridor and especially the Gateway Tunnel coming to New Jersey, which will be tremendous for the future of our state?
So wait a minute, I was supposed to ask you about the Gateway Tunnel.
Oh, I beat you to it.
So, as far as infrastructure goes, we're certainly at a starting point from working with a new administration on a huge lift. This is not something that is new to the U.S. Chamber. We're in a very similar position with President Trump in the last administration. So we're used to it. And like you said, we are focused on what some would characterize kind of a shovel-ready approach to rebuilding aged infrastructure. We actually have a pay-for that on the table. I think we were really the first national organization to say, like, look, the user fee, otherwise known as a gas tax, has to be updated to reflect the need for funding to repair crumbling infrastructure. So that starting point now is both good news and bad news. And the good news is we've done it before. We're fully supportive of a robust infrastructure package. Bad news is we're starting again kind of at this partisan impasse, which is kind of the opposite that we're supposed to be starting. Ideally, we would start with a bipartisan start that has its different tangents and different kind of tribes going to different places, and you end up negotiating towards a final product. So it is unfortunate that we're starting at a point where the pay for has created kind of a very shirts and skins environment. But again, we're at the starting point. So the fact that infrastructure is now being discussed both at the front page and at the front end of different presidential press conferences, we view that as a positive. And we are hoping that positive lead to more bipartisan discussion, as opposed to what we've seen when President Biden announced kind of the pay for concept, which is raising corporate tax rate, and quite frankly, I think imperiling our global competitiveness as a country. That unfortunately had the opposite effect that we were kind of hoping for. So we're doing everything possible to kind of get back on track into a bipartisan mode, see where we can't look at the positives and then have other types of pay for solutions kind of bubbling up through that bipartisan discussion. So that's a long way of saying we're glad that it's front page. We're glad that it's that it's a priority. We're less glad that the initial pay for created a hyper-partisan environment.
Steve, you have another question?
Tom, I think my final question to you is, what would you say the mood is in DC post the attack on the Capitol?
That's a tough one. There's still fear. I mean, a Capitol police officer was just killed last week, so less than a week ago, and that fear leads to anger and exasperates partisanship. I think the most comforting advice I've heard was from the head of our lobbying team, Jack Howard. It was right after the Capitol riots, And he said it took a long time to get here, and it'll take a long time to recover. And that both is a short sentence, which is typical of Jack, but also profound. And I think he's right. So I hope that answers. I hope that answers your question. It's going to take a long time, but because we have your leadership, Steve, Tom, your leadership, not only as the head of New Jersey Chamber, but also your leadership within a group of the top chamber executives in the country, that leadership is going to shine through to make that long-term solution possible. So I am optimistic, but it is going to take a long time to kind of repair the wounds that got opened after the January 6th riot.
One question I think I'd like you to comment on, and that is one of the things that penalized New Jersey in the Trump tax reduction was the SALT deduction elimination. And I know that's now back on the table in discussions about the infrastructure plan. What do you think the prospects are of having the SALT deduction issue removed or modified to help New Jersey, which was one of the foremost negatively impacted states by that?
So, Tom, I'm going to give you the honest answer. I don't know.
Okay, but it is being discussed, right?
Oh yeah, yeah. It is. I mean, the pay-fors, the SALT the deductions are all being discussed, and you know, I think to put a positive spin on it, the fact that there are those discussions leads to some optimism. I mean, and that kind of gets at how much of a starting point this is. You know, big announcements of roads, bridges, broadband, I think fairly well received within the business community. Big announcement of raising corporate rates, immediate partisanship, very divisive. So now that you get folks diving into taxes more broadly and some things that could be negotiated, that's a step in the right direction.
And I would just reiterate that we are very fortunate to have Josh Gottheimer leading the charge on this. He was instrumental in helping with the PPP modifications. He's been very aggressive, and quite frankly, he is a New Jersey congressman. He's been one of the more effective congressmen in helping the small business community in general, and he's all over the SALT deduction. So
yeah,
that should go well.
I couldn't agree with you more. Josh has been a good friend to the chamber, to your chamber, to the U.S. Chamber, and he really has been instrumental in starting those bipartisan discussions. So we're putting a lot on his shoulders, but I think he can handle it.
I think he can too. Well, that's an hour. We like to honor our commitments of an hour, and I want to thank you, Tom, for sharing this information with us today. It's been extremely helpful. Congratulations to you for your work and the work of the U.S. Chamber on helping the entire small business community of the country. Steve Goldman, I want to thank you and New Jersey Manufacturers for making today's webinar and small business series possible. We really appreciate that, and I think the audience got a lot out of today's discussion, and we'll get a lot out of the future webinars. The next webinar we have is Wednesday, May 19th at 9 o'clock. It'll feature Curtis DeBay, the senior economist at the U.S. Chamber, who will talk about the national economic outlook for the second half of 2021. Again, I want to thank everybody for participating today. Thank especially Tom and Steve, and we look forward to you participating with us on the May 19th webinar. Thank you for joining us today, and have a great day.
Thank you, Steve.
Thanks,
you, Tom.
everybody.
Thank you for your leadership.
Stay well.
Take care.